I keep everything completely straightforward with my customers. Like, customers are like, they're completely baffled that somebody talks to them the way I talk to them. So, for example, and this
unapologetic, you're the insurance expert.
Exactly. But so, for example, this may have been the conversation you overheard. I don't know. But I would have a customer who would call, this multiple times. You'll have customers who call you like all the time for the same thing. It's like every 2 months or 1 month, they're like, hey, can you get my rate lower? And I'm like, hey, I shopped you already. Like, you're in the best spot, right? Whenever one of those would say, I'm going to leave you. Like, I have no choice. I've got to leave you. And they're really just, they're not really being truthful. They're just trying to see if you really do have another deal for them out there to get them something lower. And I said, if you leave me, you will make me money. And they said, I'm sorry, what? And I said, it's economics 101. It's called the law of opportunity costs. The time that I spend with you every single month talking to you is time I won't have to spend talking to you if you leave me. And during that time, I'm going to sell policies to customers who aren't going to bug me every single month. And so I'm going to make money next month in the hour that I'd be talking to you. I'm going to make money in the month after that in the hour I'd be talking to you.
Time value of money.
Yes. And so if you leave me, I will not lose a dime. I will actually make a lot more money than I'm making now. So you can either stay with me and be with the best agent that I've personally ever met and have that guy as your agent, or you can leave me and I'll make a bunch more money. Or sorry, I'll say you can leave me and have the like I said, the best agent that I've personally ever met, and stop calling me every single month for this. Or you can go and I'll make a bunch more money if you do. And I don't recall a single time where any of those people left. They just stopped calling. They got there, as my old roommate used to say, you're going to get you some Act Right. So they got themselves some Act Right, and they quit bugging me every single month.
But that directness, right? I mean, that's I'm sure what enabled people to actually follow you when you're giving them that 2-year notice, that year and a half notice, right? Yeah. I'm sure that's what enabled them to carry over when you went to Nationwide. So how long were y'all at Nationwide?
We were at Nationwide from January 1st, 2014, if you don't count the 2 years he was in the program. So we started our own agency live January 1st, 2014. And we left Nationwide and went independent May of 2018. So 4 years and 5 months, 4 months, something like that.
Okay. And what was kind of the driving factor for y'all actually making that transition from the captive into the independent space?
Well, Nationwide had offered agents to be able to buy their own books. And that didn't make sense to a lot of insurance agents. In fact, most of the Nationwide agents did not buy their own book. Because, like, if I were to purchase an agency, I would buy an income-producing asset. And yes, I'd be making payments toward it, but I'd be buying something that's going to bring in more income, new revenue for us, right? But when Nationwide said you can buy your own book, that didn't make sense to a lot of other agents, because they were like, why would I pay for something that's already it'll be bringing me the exact same amount of money it's bringing me now, but now I've got a loan that I'm having to pay on top of that. That doesn't make any sense. And to my brother's credit, he sat down and did the math. And only 3 agents in the entire state of Texas took the deal. And the math was, he said, hey, we're closing 20% of the calls that come in currently with Nationwide. He said, if we go independent and get contracts with a few other carriers, if we double that number to 40%, then in 2 years, all the new business we're writing and all the renewal business we're writing will pay for, or all the renewal business that's renewing, it will pay for the loan easily in 2 years.
Yeah, because your bind rate's going up. Your your close rate with everything else, you're able to bring in more revenue.
Yes, if we double our close rate. What wound up happening is with just 4 carriers, we quadrupled our close rate.
Man.
So it wasn't even like 8 or 9 months before we broke even with that monthly note.
I think that makes a lot of sense, because I remember talking to him, and he was obviously very inquisitive, as you both are. Which is great. Being a student of the industry and really learning those things is what you really want to see from our existing members or any insurance agency that's out there, because they become greater client advocates. But he was asking, what are y'all's close? And I'll take a quote from my dad, who was like, well, I 100%. And I go, well, how do you figure? I think Wes asked him, it's like, how do you figure? He says, I only quote business I know I'm going to win. Mm-hmm. That's the other extreme. But going from 20% close rate, which on a captive side is not bad. That's not bad at all. In fact, that's usually better than what you see in a lot of the other ones. And so to then go from that to the independent, now quadrupling that, holy cow, y'all on a whole different level. What would you say has been the greatest change in kind of how y'all's dynamic working together as brothers, coming from the captive to the independent, or is there just more of it?
Just more of it, yeah.
Yeah.
So is it really just the power of choice that opened up that quadrupling of the close rate? Was it that simple, or was it just, did y'all have to change the way you sold, the way you educated?
No, I mean,
clients?
the way, so we only got contracted with carriers who have, the broadest coverage. So on the home insurance side, they've got the seepage and leakage coverage. They have the sewer backup coverage. They have the foundation coverage. We are absolutely a coverage agency. I have converted so many clients from being a price client to a coverage client because this is your home we're talking about. Why are you gambling your home for a couple $100 a year, even $1,000 a year, $2,000 a year? Why are you
Right.
gambling your home against that? That doesn't make sense. And so I have converted customers who are paying less to switching over to paying more because they're leaving a carrier that doesn't cover things. It's written in their contract they don't cover these things, right? To moving them over to a carrier that does. And so the vast majority of the time, yes, I'm saving them money. So hilariously, Standard Insurance, they advertise all the time on TV and radio. A lot of the clients that I've taken from them, so Standard Insurance, and you can read this in their contract, they only cover one of the 5 types of water damage, which is water coming from above. So if the roof blows off, water gets in, they're picking that up. They do not cover sudden and accidental discharge of water. They do not cover seepage and leakage. They do not cover sewer backup coverage. Nobody covers flood on a home policy, but that's the 5th one. But I'm telling this story to a customer who's got Standard Insurance, and she said, "Oh, I know." She said the February freeze of 2021, she said we had our pipes burst, cost us $60,000 to fix the damage that the water caused. We just thought no home insurance covered that. I'm like, no, they cover it. Just Standard
not
doesn't
them.
cover it. Yeah.
Yeah.
But the reason why I said it's wild, start that conversation. Sorry, I'm sounding like Mike Sterlacey going like a huge tangent to get back
That's all right.
to the point.
I'm partial to him. It's
Well,
all right.
Right. So it was like I actually saved them a ton of money. Like my policy was less expensive and it had so much more coverage than what they had on it before.
That comes from understanding the policies, being like the certified risk management approach. Like, are you actually advocating? And I
Right.
know you and your brother have always really pushed advocating for the client and understanding that. What would you say was one of y'all's hardest obstacles to overcome, either recently or in the past, that you gleaned the most information from?
I don't know if we really have. Like, I mean, nothing has felt like any kind of obstacle at all in the last,
Okay, let's make it very close. How did y'all navigate the last 2 years of this hard market? What have y'all been doubling down on to be able to focus?
That's easy enough. Because again, customers are just wondering what in the world's going on.
Mhm.
And one of the things I tell other insurance agents is, in fact, I belong to a networking group, and I said, I visited one of the other chapters, and I said, hey, if any of you have ever called your insurance agent and asked them, why did my rates go up? And they replied back, because there was a general rate increase in the area, I'm going to steal that customer. Because let me rephrase what you just said. They said, why did rates go up? And you replied, because rates went up. Because that's all a general rate increase in the area is, right? So that person's going to hang up the phone and shop. It's like, you told them nothing. And I said, if you want better answers, call a better agent. And I sat down. And the room's like, ah. So I had just come up with that right on the spot. Like, I'd never used that line before in my life. And I came up with it right there, and the room just went crazy. And so, in fact, a couple of them came up to me afterwards, and they were like, because that chapter already had somebody in the group that did insurance. And they were like, hey, can I call you? They're like, I want a better agent. I'm like, that's funny because this person's been in the group for, 8 years or something, right? Sorry, got sidetracked there. So during, say, 2023, 2024, when they were asking for why in the world did rates go up 40% in 23, why did they go up again 40% in 2024? I would sit down and explain to them things that they'd never thought about, right? Because I'm an agency owner, I can see losses, see loss ratios.
Right.
Because we talk to other agents in the area and we talk to the carrier reps, what do loss ratios look like in this area, that kind of thing. We know the losses are there, so it's not just like, hey, and again, even that answer is too vague. Like, well, the losses are higher, so your rates are
we
lower.
had 4 100-year storms in the last year.
Right. So, even that, I still wouldn't. So what I would say is I would take auto insurance, for example. I'd say, hey, look, I have, and this, if you know how big of a math nerd I am, you would know that this is not an exaggeration. I have sent my mechanic over 600 customers since I met him in 2009. Okay. And historically, or I said, and out of those 600 customers that I've sent him, exactly 0 of them have ever called me and said they found somebody cheaper than him. He's batting 1,000. He wins every single time. I said, so what? I said, before COVID, if I sent in somebody who, let's say you had a 2018 Kia Sorento and you needed an engine for it because yours went out. He would go find an engine at the junkyard with 60,000 miles on it for $500. He'd charge you $500 to drop your old one and put in your new one. $1,000 later, you got an engine. So would you rather buy a used engine for $1,000 or go buy a brand new one for $6,000? Right? Yeah. You could put in 6 used ones for what, And again, the reason why he was smoking everybody, because if you went and found a used engine anywhere else, it was going to be $3,500. So he was just absolutely annihilating anybody else out there. I said, what happens now is if I called him for that same 2018 Kia Sorento, there's only going to be 3 of those engines in the entire country, and they're going to be at $2,800.
Yeah.
So because his brother runs a network of junkyards across the entire country, so he just gets on there and finds him, the engine, sells it to him for whatever. But now there is no inventory.
Well, because COVID ate up everything.
That inventory, right? Because nobody was buying new anymore because they weren't making new. The supply chains were disrupted. They're only buying used. So how that runs over into insurance is if you wrecked your 2018 Kia Sorento, you had a front end collision and we got to put an engine in there, the insurance company's not going to buy you a brand new engine because you didn't have a brand new engine in there to begin with, right? They're going to find you that used engine. So now the insurance company is going to go from paying $500 for that used engine to $2,800 for that used engine, not including labor.
Right.
Okay. So what that has caused is that's caused total losses to go up probably 4x what they were pre-2020. We're now totaling 4 times the number of cars that we would have. Same collisions, but we're totaling 4x what we were because prices have come up so much.
That's before you get into the supply chain issues and everything else.
That's one right there that I would tell them about, because I had a customer this happened to in it was I think December of 2023. Yeah, she had just bought a 2023 Kia. Yeah, it was a Sorento as well. 2023 Kia Sorento.
How many Sorrentos do you insure?
No.
Do we need to get them a hit with a sponsorship or something?
Kia, KIA stands for Killed in Action. So,
oh my gosh! Well, now we can't.
So
that's like Ford found on road dead. But.
No, I don't know. I've never heard that. I pulled that from my. But anyways,
Killed in Action.
Yeah, no. I mean, obviously I've heard Killed in Action. I've just never heard anybody put Kia together with Killed in Action. Anyhow, so she calls me. She got hit in the rear end. The tailgate was damaged and the rear bumper was damaged. $7,500 worth of damage. But the tailgate was on international back order. So this is another thing I explained to the customers. I'm like, look, what are the insurance company's options? It was on international back order with no ETA on when this thing was even going to come in, right? So the insurance company's options are you run out of rental car in 30 days, or with some carriers they give you unlimited rental car if you use one of their partner facilities, right? But then they've got to factor that into what if it's 6 months before that tailgate comes in, and you're spending, let's say it's costing them $40 a day times 30 days, $1,200 a month times 6 months, $7,200 just in rental car in 6 months, like. They're not going to do that, right? And that's because they don't even know if it's going to be here in 6 months. What if it's 2 years before it gets here, right? They don't know, so they're not going to do that. So that's not an option. Another option is to put you back in the damaged car and let you drive around in that until the tailgate comes in. Happen. That's not going to happen. That's a liability issue, right? So their only option is to total this thing. So this car has $7,500 worth of damage. They cut her a check for $30,000 because they had to total a car with only $7,500 of damage. We're in territory we've never been in before. And that's what's driving these large losses. So for that agent that told them, your rate's going up because of a general rate increase, my answer was what you just got to hear. Right.